to YouTube to see the visuals of what I am sharing. So I'm going to share my screen and I'm going to give you an idea of what it looks like when you are bidding and doing an analysis of what it is that you're looking to purchase from the bank. So as you see, this was a non-performing mortgage pool tape that I received from a hedge fund. And so I extracted what I was looking for. So the particular states that I was looking to invest in was Georgia, North Carolina, and South Carolina. So I extracted what I wanted. And then from there, I started to do a sort. So as you can see, I'm not looking at properties. I'm looking at numbers. And that's why I said for some real estate investors, um, this may not be their jam. So that's why you have novice people who their only exposure to real estate is what they see online, the fix and flips, the multifamilies. And so they're used to seeing hard assets. They want to see hard assets. So things like this, they're not interested in. But for me, I'm a numbers person. I like to analyze. So this is my jam. So I enjoy looking at numbers, doing calculations to decide on what type of returns and cash flow that I'm looking for. So the first thing I do is when I do my sort of the tape is I do a sort for um, the the payments of the assets. And as you can see in column E, um, the payment stream start at $126. Now, I normally invest in things that are $250 or higher. So that's why you see the dark gray, because this is telling me that I'm not looking at none of these assets that are below $250, because that is the payment that the homeowner is making to the bank. Hence, will be me if my bid is accepted successfully. And so, if you see, make this a little bigger for those who are online, may can't see. As you can see, it starts off at row 6. So row 6, I do some calculations. I'm looking at number one, I'm looking at this particular homeowner because this is a non-performing mortgage note. So I'm looking to see if any payments have been made. So I'm noticing that the homeowner has made some payments. They make them a bit sporadic, but they're making payments. So they made a payment in June and in May, and it looks like they make big lump sum payments. And so the unpaid balance on this particular asset is 17,781, and I do some calculations according to the asset manager. Last payment date was as of this year, March 16th. 2023. But I can see if this payment stream is correct, they've made some payments. And so they'll let me know what the days since the last payment. And this is an interest rate for that particular mortgage note for at 10%. So like I said, I run my own numbers. I know how much yield I want. And I'm looking for a 20% yield or 22% yield. And that is how I determine my bid price. And so my bid price is going to be 13,288. That's what I would bid on the mortgage note, because of course I'm not looking to buy the note for dollar. I'm looking to get it as a discount, because the great thing about mortgage notes is that you're investing in cash flow, which allows you to have instant equity. Unlike buying a home, there are some people who may buy them right, who may buy them wrong. But those who, most people understand with a real estate asset, you have to wait for the equity to build up. With mortgage notes, you decide on the yields that you want. So that's why understanding the numbers and doing your calculations is very important. So you'll know if this is an asset that you want to bid on. And so the columns that are in yellow are some calculations, that I did to be able to come up with my numbers. This particular video, I'm not going to go into calculations, but I'm just going to show you some of the things that I look at. So, this is to give you an idea of the tape. So I'm not going to bore you. I'm going to now share with you the case studies, because a lot of people are like, oh, you're just showing me a whole bunch of um, Excel files. So now I'm going to show you two of the assets that are on this particular tape that I was looking at. Because I guess I should have pointed out, and let me go back and share with you that on the tape, as I'm doing my calculations, the ones in yellow are the calculations that, based on the information that was given to me, I'm able to come up with some numbers. Now, as you notice, there are some things that are missing. I mean, this particular asset manager was able to give me the dates that things had got modified. Some of these assets got modified on here, as you can see, in 2008, this one in 2019, this one in 2021. So it kind of threw off my numbers. But the things that I didn't have is I didn't have the original maturity date. I like to have that to be able to reverse engineer some of the calculations that I'm calculating. Also on here, remaining term years, some of them are empty, which is why it's pink. So for me, I do that little color coding to let me know that some of the calculations didn't work out correctly because I'm missing things. I don't have remaining term years or what have you. And like I said, I didn't get the original term for any of the assets, and the original maturity date, I didn't get anything here as well. So I just wanted to kind of point that out. So now I'm going to do a case study of the actual asset. So this is Albany, Georgia, a non-performing note. As you can see, nice little home, it's definitely well taken care of. Like I said, it's a non-performing mortgage note. But what I noticed with the tape is that this particular homeowner is making some payments. So it's not like they have stopped making payments. It's been over the years. I mean, over a year, they are making some sporadic payment. So I feel comfortable with that. Along with that, I look at some of the details, and these are the details that are important for me to be able to make a decision on if I'm moving forward with buying an asset, or if I want to JV with a funding partner to be able to fund this particular mortgage note. So here are the details. So the BPO on this asset, based on the bank, is 70K. Unpaid balance of 17,781. There's a payment that's the homeowner makes of 255 and 83 cents. Remember, I mentioned that they make those payments sporadic, and I'm going to give it a bid price of 13,000. That would give me a yield of 22%, and my cash on cash return on investment would be 23%, double digits. Now, please tell me that there are not too many real estate assets that you can invest in that are going to give you those yields. Because see, when I buy it at a discount, I get an automatic yield on my money of 22%. And like I said, um, I'm acting as the bank. I'm concerned with my yield and the cash flow I'm receiving. I'm not concerned about the asset. I'm concerned because I want to make sure my investment is secured by a real estate asset, but I'm not buying the property. I mean, clearly I'm seeing that, homeowner, seemed like it's well taken care of, manicured lawns. So clearly there is some pride in home ownership with this particular asset. So I feel comfortable with that. Of course, as I go through due diligence, when I put in my bid, I'll have, and a real estate agent to do a drive-by just to make sure that this is a current that this is the current condition of this home. But for what I see, the things look good. I mean, like I said, I like these numbers. I like these yields. It's definitely something I would move forward with. The second asset, this is in Georgia also. Lincolnton, Georgia is a non-performing note. As you can see, looks like property is well taken care of based on, Google, what's it called? Google Earth or whatever. So I took a picture of the asset. And these are the details. So the BPO on this particular asset is 220,000. The UPB is 59,691. Payment is $309. Bid price, I would bid at $29,621. It has a yield of 12%. The cash on cash return on investment for me is 13%. Once again, double digit returns. My yield is 12%. I'm happy. I'm happy. And this particular asset, I would have to do more of a deeper dive because I did notice that the mortgage term was over 300, 300 remaining payments. So has me to, once again, they didn't give me on the tape the original. Let me go back to it. I didn't get on that particular asset. I didn't get the original term because, as you can see, the remaining term years are 423. I mean, that's pretty much that's 40 more years. So I'm curious to know what type of original term was made. And then, as you can see, the original maturity date is missing as well. So, so those are some things that would raise a red flag. But once again, you know, um, double digit returns and yields because once again, I'm buying a payment stream. I'm not buying an asset. And so these are the things that mortgage note holders, um, like myself, those who invest in non performing mortgage notes, we're looking at the payment stream. We're looking at the amount of yield that we want to earn, and we're looking on the cash on cash return. So, this is just an example of what investing in cash flow looks like. Because, like I said, you have people now who are saying, there's no deals, it's hard to invest in real estate. Exactly, because those individuals are able to do things when times are booming. It is now when things get a little rocky that it's going to separate those who were serious and those who are curious. And so, normally, how does this play in the scheme of business funding, which is what I always talk about here on the Never Lose a Deal podcast, here on YouTube? Well, once again, business funding, being able to leverage some type of form of funding. I talk about the real estate capital stack. Clearly, both of those assets I showed you, one bidding at 13,000, the other one, the bid was at 20 something thousand. Now I look at my business funding capital stack, and I compare what type of funding do I want to use to be able to move forward and purchase those assets. That is how you avoid getting caught behind the eight ball. Because if you're going to leverage some type of funding, you want to make sure you have a cash flowing asset to be able to offset some of the funding that you are looking to leverage. But that goes in hand with understanding your asset class. Most people don't understand their real estate asset class, so they're thinking that funding is going to fix those things. No, they're not. You needing to understand the working metrics, meaning know your numbers, know what type of returns you want. And this is not even what real estate knows. That's with anything that you do in real estate, is that most people are not running their numbers. They do not know what their numbers are because they're buying into the success that they see other people do online. They will not run their numbers, they will not learn. And I say this as we are in 2023, going into 2024. Now is not the time to try to wing it. Don't try to wing it. Now is the time to really hunker down and become a student or whatever that you do in real estate. If fix and flips your jam, then know the numbers. If buying multis is your jam, know the numbers. If you do invest in mobile homes or tax liens, know the numbers. But do not be that person who thinks I need to get some funding, and then when I get the funding, I will invest in real estate.